All right. Good morning, everyone. I hope you guys are having a great day. We are definitely looking forward to our home buyers workshop today to be able to provide you guys with a little bit of a market update so that you have an idea of kind of where we stand with the sales in the market, where our inventory counts are looking like, and also just as far as the economy goes, as well as some loan programs that are currently available. And we have two of our lending specialists, Denise Ogata with Tri-County Bank, as well as Rosie Lopez with Self-Help. And so I'm going to go ahead and get started, and we'll go right into our mission for our organization. So this event is hosted by Realtist of Fresno County, the One Fresno program, and the WISH program. Our initiative for this program is designed with high level of comprehensive homebuyer education and counseling, financial literacy, first-time homebuyer workshops, down payment assistance programs, grants, and flexible mortgage products, programs for the community of Greater Fresno. The purpose of this initiative is designed to increase home ownership rate for low to moderate income first-time homebuyers in the Greater Fresno region. So I'm going to hand it on over to one of our members, Jeffrey Hess, so he can introduce our team.
Thank you very much, Aisha. My name is Jeffrey Hess. I'm a realtist as a member of the Realtist of Fresno County. I'm also the organization's first secretary. Aisha Allen is our intrepid and excellent president. We also have Lionel Akpovi, who's our past president, Krishna Lott, our second vice president, Rosie Lopez, who's here with us today as our treasurer, keeping track of all the monies. Tamisha Steele is my backup at second secretary. Mitchell Shaw is our chaplain, and Annette Didios is our parliamentarian.
Our amazing partners. We are partnering with the city of Fresno to be able to provide this initiative, Realtist of Fresno County, the organization that we have helped co-found, and Tri-County Bank. So right before we go into our market right before we go into the loan programs that are currently available, we are going to have just a bit of a discussion. Let me stop sharing. Denise, can you turn your camera on? Are you able to do that? Awesome. And you're muted right now. You too, Rosie. You guys can unmute yourselves. All right, awesome. So we wanted to share a little bit more about where we stand in the economy and with the market. We were having a bit of a discussion, and we wanted to share that with you. I recently attended a conference in Anaheim. It was California Association of Realtors State Conference, where we have updates in regards to where we stand in California with the market and also across the nation. There was a chief economist that came on and gave us some really great details about where we stand with things, and also gave us an overview about the history of our economy, which also includes interest rates, sales rates, and other important information. So let's just dive in a little bit as a team to talk a little bit about what you guys have seen. Jeff, you want to share anything? Let me pull up.
Yeah, we're definitely, sales are extremely slow. And there's a number of reasons for that, but we're in the sales volume territory that we were in like the post 2007-8 bubble collapse. Prices, on the other hand, have been very stable over the last year. I've had a number of people come to me and they were wondering if they should buy over the summer or if they would wait till the winter if prices would go anywhere. A lot of people are afraid they're going to go way up. Some people are afraid they're going to go way down, but all the market indication for the last 12 months have been very stable prices. But the challenge that we're really facing is a severe lack of inventory. There are a lot of people who got mortgage interest rates in 2, 3, 4% 5 or 6 years ago that are reluctant to sell because that would mean their new purchase would have a 6, 7, 8% interest rate. We also have a lower number of buyers who are available because there's less cash available in a lot of people's pockets, and the price of interest rate makes that monthly payment so much higher. So we're hit from both ends. Sellers are reluctant to sell, buyers are finding it more difficult to buy, and that contributes together to the really low number of transactions that we have.
Most definitely. And so here, one of the things that we were talking about and discussing, and Rosie and Denise, please feel free to jump in about your experiences with interest rates. But this is a little bit of a historical, from the historical point back in April of 71 and leading all the way up to April of 2023. Interest rates have been higher. And we can see here back in April of 83, interest rates had gone up to about 18% or more. So we're not necessarily in the highest point of interest rates. We actually have it pretty good. But what happened is you can see this dip here back in 2019, 2020, 2022 timeframe when interest rates dropped to about 3%, which is something that folks don't realize wasn't something that was normal. And that was why we did have a significant influx of buyers into the market that wanted to purchase, which also had its adverse effects on the sales price of homes. They started to increase because buyers were now overbidding on the prices of homes. So as we take a look at this, the interest rates have gone up. Rosie and Denise, any thoughts you guys want to share on where you guys see things with that?
You know, in my time in doing loans, which is almost 40 years, I can remember where you guys see the peak. That's when I got in this business. And I will tell you, we had a party when it hit 14, 12, and 10%. At 8%, we were really dancing. You know, I'm thinking more of the average is somewhere between 6 and 10%. If you look back at what people were making back then versus now, in reality, we're still in a 6 to 8% interest rate. So it's more of the normal is what I see when you look at what people are earning versus what they were earning back then. So back then it was high. People have just gotten used to that 2 and 3% interest rate. But I think part of it too is that's great when it hits. But they also have to remember people are investing money. So for it to come back down that low, I'm not going to say it'll never happen, but to hope or wait for it to happen, I think you would be losing out on a lot because the odds are against it going that low again. But like I said, I'm never going to say never. I don't have the crystal ball in this. Nobody does. But you've got to be comfortable in somewhere between 6 and 10% of where rates are considered a normal in what I've seen in my history.
I'd like to add a thought on to that, Denise, where she's like saying rates won't go that low again. And I absolutely agree. If rates were to go that low again, it would mean we're back in a mid 2010s economy, which wasn't terrific for a lot of people. Growth was really, really slow. Things felt sluggish. The only way they're lowering the rates that low again is if we hit a big recession or a downturn, which nobody wants, because if that happens, the buying power then evaporates entirely. So focusing so much on like where the rate is misses a lot of the influences that drive that rate up and down. The Federal Reserve is going to choose to keep the rates at this 5, 6, 7%, so that in the future, should anything happen, inevitably there will be a crash at some point in the future, they'll have room to take them down again. So even if the market levels out and there's no recession or anything like that, and the economy seems doing fine, they're not dropping them unless something severe happens. And I don't think anybody wants something severe. I mean, I shouldn't say that. Maybe some people do. But generally speaking, most people want the economy to continue to go along and continue at a healthy pace. And a healthy paced economy is going to be 5, 6, 7% mortgage interest rates. It's not going to be 2, 3, 4%.
Great points.
Yeah, I mean, I definitely agree with Denise. Rates right now in general, do your research and your homework, but for sure you're going to see rates in the 6 to the 10%. And like Jeff is mentioning, I mean, that's normal. That's something that the economy is seeing and what we feel probably is going to be there for a while. So yeah, we're definitely going to dance and party like Denise did back then when those rates go down. But I mean, our best suggestion would just still apply and just kind of know where you are in general. Just get that peace of mind, just knowing what you need to be ready for the future. So I mean, You don't let the rate scare you. So, I mean, there's other things to work on, your savings, your credit, I mean, just your employment history. There's so much to do that rates isn't just even part of the whole experience of getting the full picture of what you can qualify for. So our recommendation to you is don't let the rates scare you, because they're not, we don't foresee them going down to those great 2-3%. This is our new reality of them being in the highs, 5, 6 to the tens. So, I mean, if you don't want that 10%, that's your best part right now, is work on the credit, work on getting your scores up, work on savings, that you don't have so much debt ratio, high debt ratio when you come and apply. And then because that, I mean, it'll really give you the picture of what you can actually afford.
Awesome.
To add on to what Rosie just said, I would say take away the rate and concentrate on the payment, what you can afford. And from there, you can decide how much more you have to save besides getting other down payment assistance or whatever. But concentrate on the payment, not the rate. And I think you'll be happier, because even if the rates seem high and rates go down 2%, you can refinance to lower that payment. But at that time, houses may be more. So you get the house you want with a lower payment, looking at it towards the future, because buying a home isn't a short-term investment, it's a long-term investment. So key thing, be comfortable with the payment. That's the whole key, not the rate, not anything else.
I think you guys make some really great points, and kind of talking about that, even where the interest rates are. Now, of course, this is going to be dependent on where you stand economically, if you can get closing credits or down payment assistance funds. But one of the things that you can do if you're really stuck on that interest rate number is, we've had this discussion too, is buying down your interest rate. To bring it down to a lower amount, which is kind of what Denise also touched upon, is finding that monthly payment that you're comfortable making. So is that something, Denise and Rosie, that you guys are seeing within our individuals buying their interest rates down to help bring that interest rate down a bit?
You know, for me, it's 50-50. I mean, if there's not too much of a difference on the payment, I mean, people are just going with the rate as is without buying it. But for sure, I mean, if it's going to save you in the long run, I mean, we most definitely recommend it so that you can have that better payment. But it's just based on what your comfort is, and the rates to buy is always going to be available. So
Remind just real quick. I don't think before I came into this industry, I wasn't familiar with what buying down your rate entailed. Can you get just a thumbnail description of when you say that? What is it exactly that you're telling someone to do?
yeah, so the interest rate that you have, let's say that you qualify just the standard 7% today with just your FICO score, your income, just your whole application in general, and you want to lower that rate. And the only way we can get that rate lowered is if you purchase the points to lower the rate to down to a 6.5, for example. So you have, so each lender has their different regulations of how they offer those points. Here at Self Help, each point is 0.25. So the max we can drop down is 2 points, which is 0.50%, which is probably different from Denise. So you might want to do your research, but most definitely you can purchase the interest rate points to lower that interest rate.
And when you say purchase, you mean literal cash. So there would be
you can cash
down payment, closing
and
cost, and then buying your points down. It's a
right.
third pile of money you would need access to.
Yes, definitely. Or you can finance them alone if that's a possibility. But that you want to definitely work more with your lender and kind of get those in if you can, without coming in.
And when she says, sorry, Rosie, when she says a quarter of a point or 1 point, what 1 point means in our terms versus yours is 1% of your loan amount, or a 0.25% of your loan amount is how that determines what the cost is.
Beautiful. Yeah, I think you guys covered some really great aspects of that. And thank you guys for your input on that portion of it. We have taken a look at current sales right now, and sales have dropped a bit. As you can see, trends end up dropping. Usually in the wintertime, we start to see things slow down. And most of the reason why we do see that happen is because it's the holidays. And a lot of folks want to be in home during the holidays, and we're getting ready to get there. We have Halloween, we have Thanksgiving, and then we have Christmas time. And then usually folks start to warm up and get pick up again in January as far as the sales go. Another thing I really wanted to touch on, which I think is one of the biggest points that we drive when we are encouraging folks to purchase, regardless of when you purchase, is how much net worth homeowners and individuals have. If you're renting, so we have 3 metrics here that you guys are seeing on the screen. One metric in the yellow is renters, how much net worth. And as you can see with renters, they tend to have about $6,000 of net worth, how much income they may have in their bank account or saved or somewhere, of values that they have. About $6,000 is what we're seeing currently on average. If we compare it to folks who are homeowners, their net worth is significantly higher. And right now we're currently looking at, or for 2019, 254,000 is what the average net worth is here in California. And the reason why is they have a lot of value and equity in the homes that they have, along with their savings. And when you think about how much of your check that you receive or your income that you receive per month and what you're paying it to, when it comes to homeowners, they're paying down their mortgage, whereas renters are paying for the rent for the home, and they are not going to be getting any of that funds back. Whereas homeowners can pay down their mortgage and have equity in their home that they may be able to access, whether it's to buy another home or to refinance and purchase other things, or just have access to capital compared to someone who is renting. So that's one of the points that I kind of wanted to drive in regards to that. So regardless of when you purchase, having some property that you can tap into or have equity into is always a great thing to have. Anything you guys want to add?
Yeah, definitely. And there is upside to the low number of transactions and the restricted number of buyers that are out there, which is that if you're a buyer, you're back in the position where you can start making some demands that you wouldn't have been able to make a year ago or 2 years ago. A lot of people I run into are still very wounded by the 2021 and 22 market, where you had to come with all this cash and you had to have these insane contracts that gave away so much to the sellers, and houses would hit the market and they would sell in 72 hours and there would be lines out in front of the houses. Our days on market is almost back to normal. I haven't looked recently, but it was around the 30-day mark last time I checked, which is what realtors and realtists consider a healthy market. So someone's listing their house, if they're thinking, oh, I'm going to get $5,000, $10,000, $20,000 over what I'm asking, it's going to sell the first weekend. It's not the case. So as a buyer, that gets a lot of power back into your control. And that all goes back to meeting with your lender and getting your lending situations sorted out on the front end before you start to look. This way you have exactly what you're going to pay every month. You know exactly the range you can spend to make sure that you're going to get into that line item that says mortgage that's going to fit. And then you can negotiate with the sellers that are selling the property that have been out there for 30, 40, 50 days that are now getting really antsy to sell. So every market has downsides and upsides. And just because the market that we're in right now isn't as active as previous markets and rates aren't as low as previous markets, doesn't mean it's worse. The time to buy is when it's right for your family. If you're trying to gamble and play a Las Vegas style of home ownership, you're going to lose. You need to think about what's going to be right for your family for the next 6, 8, 10, 12, 20 years and make decisions that are going to be long-term decisions. 95% of home buyers they're buying just the one home at a time. They're not buying investment properties. They're not piling up a portfolio. They're just trying to get a house for their family. And if you put yourself in the mind of, well, I'm going to flip it, or I'm going to make all this money in the future, or all this if you're thinking about all that, anything other than what's right for my family, it's really a distraction from the main goal.
Yeah, I think you make a lot of great points there. I actually have a client that just closed on their home 2 days ago, and they purchased a new build home. The home that we took a look at actually was on sale for the same reason Jeff is just mentioning. Their goal is to sell homes as quickly as possible. And they have a few homes, and they currently still have some deals on some of these homes that were in contract and for some reason are no longer in contract, whether the buyer decided to go with another purchase, or they just, let's say, because rates have gone up, can no longer afford that purchase price. The home has come back on the market. So that home that my client was taking a look at originally was $421,000, and they had a sale and they were having it on sale for $20,000 off. That was already a great deal for my client. I'm sorry, it was 10,000 off on that one. The other thing that we had that we got a good deal on was they were offering 20,000 in closing credits. And with my help, we were able to negotiate an additional 5,000 in closing credits. So my client really got a great deal on that new build home. And right now there are many new builders that are currently offering some of these same perks right now, because they're trying to get these houses off of the market instead of holding on to them. And what we did, or what he did or chose to do with the closing credits that he got, is that he was able to use 15,000 to buy down his interest rate so that he would have a better rate, and the remainder of the funds that he used for his closing costs. So he really didn't end up coming out of pocket a lot of money, which was a great deal in his circumstances. So even in the resale market, we are seeing some sellers who have homes on the market. Let's say it's a vacant home, a home that doesn't have anybody renting it out. They're not collecting any money monthly for that home. They may not want to keep paying that mortgage on that home themselves. So they may be motivated to help with closing costs to help a buyer purchase that home. So there are some perks to where the market is currently, where rates are, since there are many folks who are trying to get in a position to save more money to afford their down payment and closing costs themselves. So definitely, I would say reach out to a real estate agent, also talk to a lender to see what that looks like for you, and if and what your circumstance may need to be in order to be able to buy whenever you are ready to do so. Let me see. Is there anything else? Oh, one thing I did want to ask or touch on before we move on, and maybe even let you guys go into the programs that you guys currently have to offer, was a lot of folks are thinking about this market crashing or market crashing, but where we've discussed it ourselves, that if there was a market crash to come, it wouldn't be anything like what we've seen in the past. Denise and Rosie, do you mind sharing a little bit about what the difference was in the market crash that we had previously back in like the 2008 timeframe? What's different about that than now? And I guess the thing that I think about is the variable interest rates.
I'll let you answer, Denise.
Well, the difference before was there were more houses on the market. There were a lot of foreclosures that hit. So when there's more inventory or more houses for sale, it drives the prices down. Unfortunately, right now, there isn't a lot of inventory or a lot of houses on the market. We haven't hit a big foreclosure time either in California. In other parts of the United States, you know, they're starting to see that. California has such a shortage of housing right now that it's going to take a lot to get to that point. At least that's what I feel, to get to that point to see if there's a big drop. We first have to have enough housing to accommodate, and the builders just can't build them fast enough, which is going to keep the prices up.
And this here, which I pulled up, this is a delinquency rate for the mortgages and delinquency rate. So if you take a look down here in the 2007, 2008 timeframe, the delinquency rate was significantly higher as far as how many folks were behind on their mortgage payments. And that was one of the factors that we've seen that caused some of these foreclosures that came for the homes that came on the market. And we're just not seeing that. The delinquency rates are fairly low, or about a 3% delinquency rate. And a lot of those folks have, and I've been in discussion with many mortgage folks in the mortgage industry, and they are saying they're just, many of the folks that are delinquent have contacted them to set up some sort of a payment arrangement to get back on track on their mortgage payments. So as far as this being one of the reasons why we see more inventory coming on the market, that's just currently in discussion, not a factor that we're seeing as being a reason for inventory to come back into the market right now.
Yeah, I just remember being in 2007, 2008, I was a teller at Bank of America, and just so many people were just coming in to always wanting to speak with someone in the mortgage team because they were just afraid of losing their homes. I mean, and then from where we are now, I'd say where we are, what Denise mentioned, I mean, it's just inventory for sure of homes.
Right, definitely. Okay, I think we'll that kind of covers where we stand right now with our market. There's one more slide here that we're looking at as far as the price of homes. So if you're thinking about waiting longer before you purchase homes, we are seeing the median price points for homes continuing to trend up, meaning the values of homes are still increasing. So if the more you wait, the values of homes may continue to go up. I had a client pre-COVID, she was looking at houses, and I remember her going and taking, and she would take her father to every one of the houses that we would go to see. Now, her father owned several properties. However, he purchased them years ago. So the market was nothing like what we were seeing currently. And he would talk to her about how the values of those homes, like there's just too much for what she was looking at. But he was comparing it to what he was used to buying back in when he had purchased homes. So we looked at a home. It was her dream home, and the home was listed at $230,000. 3-bedroom, 2-bathroom in the Big Garden Village area. And what ended up, and it was her dream neighborhood as well. Well, what ended up happening is he would tell her a little bit about what his thoughts were, and most of the time it was something kind of negative about the home. Instead of her purchasing the home, then it happened when we had a lot of folks coming into the market to buy and just buying left and right, offering 5, 10, 20,000 over the market values of these homes. So she kept getting beat by other offers when she had the opportunity to take that house off the market. And then when she decided to take a break because she was tired of getting rejections for her offer, and when she took a break and she came back, it was probably about a year later, and we started to look at the market again. By the time we started to look at the market again, we were looking at homes $70,000 more than what the homes were when she first started looking. And instead of looking at homes that were 3-bed, 2 bathrooms for the 230 price, we are looking at 2-bed, 1 bathroom for $300,000. So waiting costed her a big bundle of money. So that's just one thing to kind of consider when you think about waiting longer before you choose to buy. Overall, if you're waiting for this rate to come down, these prices in homes may continue to creep up, which overall in the long term, you're probably going to end up paying more for.
And even in a stable market, prices aren't stagnant. I mean, in the real estate business, we consider a stable market to be like 3 or 5% a year of increase.
Right.
So if it's a $300,000 home, that's $15,000 a year. If you are waiting 3 years for the rate to come down, that's 50,000. That's more than 50,000 because it compounds differently. But it's like $45,000 or $50,000. Yeah. So there's a saying that we have as agents where it's the best time to buy real estate was 10 years ago, and the second best time is right now.
Right.
So you can It's very scary. I mean, it's a lot of money to put on the line, and think it's usually the most expensive purchase anyone makes in their life until their next home purchase. And it can feel intimidating, especially at the start of the pandemic with, what's going to happen with the market, or you watch interest rates and every few months you hear in the news of something's going on with interest rates. Is this good or bad for me? But like, if you have the opportunity to make it and it works out for your budget, that's when you need to make a decision like that, not based on these external factors or what other people are deciding. And the prices of homes are taken from the price of other homes. So when you see a property and you go up to it and you approach it and it's $275,000, you think, well, 3 years ago it was 230,000 or whatever Aisha's example was. The reason it's gone up is because the other homes around it that are like it are selling for that much. It can be tempting to be upset at sellers who you feel like are gouging you for a property that you don't think is worth what the value is. First of all, if you don't think it's worth that amount, don't pay it. I mean, as the buyer, you have that, you just don't have to pay it. Like, you can wait and find something else. But sellers are listing at a market rate. Their agents look at the other houses that are in proximity to them and what they sold for. This is true market activity where these values are coming from. Sellers aren't just pulling numbers out of thin air, especially right now. If you overprice, you're simply not going to sell. So it's very tempting to be upset at people who, let's say you were a renter and you watch these home prices go up and like, well, these people got the bag and I get nothing. But they're beneficiaries to how the real estate market in California functions. And you could be that beneficiary in a few years if you find a way to purchase that works for your budget so you don't lose the house. But, the price is just what the price is. It's what people are willing and able to pay.
Right. And this one here just is, again, on trend for where the rates are currently at. And we do see where the rates dropped back 2020, 2021, 2022 timeframe, and how they're currently trending to continue to elevate at this point. So this is all not to be Debbie Downer. We really just want to be realistic where the market stands currently and encourage folks to get into purchasing whenever they can. And you actually have a team of folks that are on this call right now. We're also going to follow up with a follow-up email that will be sent out to you all for you guys to take a look and see if you want to go ahead and just start having the conversation about getting qualified and what the market looks like and what your current goals are and what you need to do to be able to get there to buy. Or let's say you are ready now. We have a team of agents that can help you out with that. So we will send that information out along with Rosie and Denise's contact information. And we're now going to go ahead and hand it over to Denise so she can talk about more about what Tri-County Bank currently has to offer as down payment, the current loan programs, I should say, I'm sorry. So let me get that pulled up for you now. And then we'll go right into what Tri-County Bank has to offer and what that looks like.
Can I ask a quick question of our lender friends real quick? Can you go back to that slide that showed the federal funds rate, the 10-year treasury note? Do you still have that?
Yeah, 1 second.
Can you explain, Denise or Rosie, the association between the federal funds rate and your mortgage interest rate? What is the connection there between the two of them? And why should people care that this yellow line, what's the relationship between the yellow line and then the 30-year fixed?
Oh, that's not fair to not warn me what you're going to ask so I can look.
I can answer it, but you're the professional. I defer to your expertise.
I'm going to be honest. In my whole career, all I've ever watched is the 10-year treasury, because that is more of what rates are based off of, is the 10-year treasury yield. I want to say the Fed target rate is more of what is the borrowing rate for the banks. The 30-year, I'll be honest, that's a long-term bond, and I've never paid much attention to it. I'm giving an honest answer. It's the only way I know to do it. So if someone knows more, please step in.
Same for us. Self-Help Federal Credit Union is a private lender, so we don't even follow these guidelines either. So
you don't have to, right?
Exactly. We don't have to, so I don't follow them.
Did you want to add anything else, Jeff?
Oh, just that, and correct me if I'm wrong, but when you're borrowing money from the bank is also borrowing money from someone else.
Right.
And so the rate that they can purchase their loan at, that yellow line there, whether it's the interest that they take, and interest is the cost of money, the interest that they take on the loan, they need to still make money. So as the borrowing rate for banks goes up, the borrowing rate for buyers goes up, because the banks are going to add whatever percentage they add to make their own money. And I'm not critical of banks, like this is how the system functions with interest. But when you hear about the borrowing rate for banks going up at the federal funds mark, that's why your fixed rate mortgage goes up, because the bank, it's costing them more now to borrow the money. So they have to charge you more to make money on the money that they borrowed. So
Correct.
it's not that the Federal Reserve is reaching into individual mortgages and saying, now you must borrow this much, but they're raising the cost of borrowing money globally. The external effect is that the individual mortgage that you get goes up to match that increase.
Correct.
Awesome. Thank you guys for that info. I think we're all kind of learning a lot here with kind of market trends and where things are, and then just how things work. It gives you kind of a better overview of what that looks like. So let's go into what programs you have to offer, Denise, and the floor is yours.
Okay, so for first-time home buyers, which is considered someone who has not owned a home in the last 3 years, there are special programs. There are also programs for people that have already owned a home, but here are a couple that Tri-Counties has through Tri-Counties Bank. We have the WISH program, which I will tell you is probably the best down payment assistance program I've run across in my time. And the reason why is, I'll give you a little bit of the background. It's a 4-for-1 matching grant. What that means is for every $1 you bring in, WISH will give you 4, up to a maximum of $29,000. So you bring in $7,250 minimum, and WISH will give you $29,000. You live in the house for 5 years, and the $29,000 is fully forgiven. So it's kind of like you walk in with $29,000 of equity, because your $7,250 will usually cover most of the closing costs, if not all the closing costs and prepaid. The few catches that there are, because every program has something a little bit different, but for WISH, your income must be below 80% of the median HUD income for the area of where you live. You have to live in the house for 5 years. 20% per year is forgiven. So if you live in the house for 3 years and decide to sell it or rent it out, you would have to pay back 40% of the $29,000. If you live in the house for 5 years, the full $29,000 goes away. We can do this program or this grant as a second behind our CalFA First, a Home Ready mortgage, or a Home Possible. And those are Fannie Freddie products or conventional loan products. So we can only do this with conventional. We can do this with an FHA loan also. So we can do them with all of those. The next program is, I'll be honest, it's the NAAC. And we currently do not have, those actually ran out of funds. Just like the WISH, these programs run out of funds. So much is allotted to them. When that's gone, the program goes away. With WISH, every April 1st becomes the new allotment. So say we run out in November, December. It's not a downer. We just readjust to be ready when the funds come available April 1st, because that gets renewed every April 1st. The NAAC program, we've run out of funds. for that, but they're expecting to have the funds back again in roughly about 30 days. This one, you also have to be a first-time home buyer. You must be at or below 80% of the median HUD. And it is just like the wish. You stay in the house for 5 years, it's fully forgiven, or 20% per year is forgiven for the amount of time you live there if it's shorter than 5 years. And this one, you qualify for up to 3% of the purchase price to a max of $10,000 for the home. Oops, hold on one second. Sorry about that. And we can actually, what we call layer these programs. You can actually get the WISH and the NAAC. We also have one other program called the Special Purpose Program. And that's the next slide, Aisha. And this one is for the borrower has to qualify income-wise, which is actually higher than the other two programs, and that's at 150% of the area median income. So that gets you to like 119,000 roughly for Fresno County. But the borrowers have to qualify and the property. So the property must be located in a designated majority Black or Hispanic census tract within the Tri-Counties Bank Assessment Area, has to be owner occupied. And this program can be used for a purchase of a home or if you're going to refinance. And you can receive up to 3% of the loan amount up to $7,500 to help towards covering closing costs and prepaids or buying down discount points that we were talking about earlier. So, and believe it or not, you can actually put all three if they're available. Like once the NAAC comes back, you can actually put all three of these programs together. So in reality, you could get up to, what is that, 39, 40, like 4650 in down payment assistance help to get into a house, because they can all be put together along with your first. So that helps you with closing costs. Just remember, each program will have you come in with a certain amount of money. In all of these, basically, once you come in with the WISH requirement of $7,250, you'll have met all the requirements for all the programs. Now, if you don't have $7,250 for the WISH, say you only have 4, then you would get like $16,000 because it's a 4 for 1. There are some others that we don't have slides for. We can also do programs in conjunction with the down payment assistance with the city of Fresno and the county of Fresno. This household income slide that she's putting up is what the maximum income is for your household size. Okay, so it's not for the person just going on the loan, it's for all household income that will be living in the new house. So you can kind of see where you guys fit in that. Special purpose, of course, is higher income. Each program has different income limits. So you've got to call to make sure of where you fit and which programs you qualify for. But like I said, we can put these together with the Fresno City, the Fresno County down payment assistance programs. And currently right now, I have one for the city of Clovis. So if you're looking to buy in the city of Clovis, I have one that you can get up to 90,000, and we can layer all of these together with that one. So there's different options. There's a lot of things to look at. So the main thing is first calling your lender. These only Tri-County offers, but every lender can have different programs. So you've got to call one and start doing your homework. Ask questions, ask questions, ask questions. Remember, there is no crazy question or anything. If it comes to your mind, it's a question you need to ask your lender. Okay? That's it.
Thank you. Thank you. Thank you. We appreciate that, Denise. And if you guys have any questions, we're going to move on to Rosie next so she can tell us more about what self-help has to offer currently. But if there's anything you guys have questions on, please feel free to add your questions to the chat and we'll definitely try to get to those questions before the time is up. All right. And then Rosie, we got you.
Okay. So for self-help, we are a credit union. So we are, there's two self-help organizations out here in Fresno. So one is Self-Help Enterprises and one is Self-Help Federal Credit Union. I am Self-Help Federal Credit Union. We are a full functioning credit union where we offer not just home loans, but we also offer if you're looking to build your credit, just looking for a standard just credit union to have a checking, savings, auto loan, most definitely we offer all that here. For those who have a Social Security and of those who also have an ITIN number, which is a tax identification number as well. So if you know anyone who needs accounts or just needs to start earning credit, most definitely send them our way. So for our home loans, our specialties, what we do is our first loan that we're offering it's called our Equity Boost loan. With that one, it's more for first-time home buyers as well who also earn a modest income. And the income requirements are below here at the slide. So anything for, and just as Denise mentioned, kind of similar, 80% of the area median income for your income earnings, or so there's two ways to qualify, sorry, or there's 150% AMI if your borrower's first generation home buyer. So for this program, we can finance up to 5% closing cost into the loan. And minimum, what we really try to strive for this particular loan is the borrowers come in and contribute at least 1% of the purchase price. So you do have to have a little bit of savings, but we really try to get you in with most minimal savings as possible. And for that down payment, the 1%. It's a lower interest rate that we offer. So like we mentioned, the interest rates are anything from 6 to 10%. So with the Equity Boost is Self-Help actually contributes a grant funds into the loan to help you boost the interest rate to get you a lower interest rate, but it's still within that same range. So it's based off of your credit score. In the payment, there is no PMI, which is private mortgage insurance. And then we do offer the loan for minimal credit score of 580. And if you have no credit score, we also have other loans that we can help that if you have no credit score at all, no traditional credit, but where you're currently renting, you're making your water bill, your electric bill, your rental payments, all those on time, those we can accept as credit to get a home loan. So so that's also a great incentive that we offer to start applying now, just to kind of see where you are with your income and your credit, most importantly. And then also with this program, once we close the loan, Self-Help gives $2,000 contribution to you, but you have to live in the home for 3 years in order to get the $2,000. It's kind of like an emergency fund that we try to get you started to build up some more funds if needed. But most importantly, this loan is more geared towards first-time home buyers and with less savings. The next slide, please. Our Self-Help 100 loan is a loan that we can finance 100% of the closing costs and down payment into the loan. But again, borrowers do have to contribute 1% towards closing cost into the loan. It says 1 to 4%. What we try to do the other 3% is try to get that seller credit. So right now, like Jeff was saying, here's the time right now that borrowers can ask for incentives. So our minimum is 3% seller credit. So here's where we can get that 3%, and then you come in with that 1% of your own funds into the loan. Again, no private mortgage insurance. There's no income limits or purchase price for this particular loan option, but you do have to have the minimum credit score of 620. So we do want to see some traditional credit that you have already established and can maintain a good credit history on those ones. Okay, next one. Just as I was mentioning about what we offer and who we help here at Self Help, those who have a social security number as well as an ITIN number, we definitely can lend for homes for those borrowers as well. They do have to have a minimum of 5% down payment, as well as a 580 credit score, or no credit score as mentioned. And then again, we accept the alternative credit. So when I say alternative credit, it's the electric bill, water bill, rental payments, and those just have to be made on time in full for the last 12 months in order for us to accept those. Again, there's no private mortgage insurance, extra insurance into the payment. And then all of our rates are fixed. Our rates are based off of your FICO score, your credit score. So that's where we're really stress the credit, so that you can get a better credit interest rate, excuse me. And then just the loan is available for the ITIN borrowers for everyone, whoever who is a W-2 earner, or if you're also self-employed. And then for our loans, we only lend on residential owner-occupied resident homes. So if it's a home that you're trying to look commercial, we don't lend on those. And then if you want to pay the home loan off sooner, we have a little guest. You want to pay off sooner, then there will never be any prepayment penalty fees. And then we also offer refinancing for all Social Security and ITIN borrowers as well. And then just standard. So if any of these loans don't meet guidelines, that's why we recommend you to just come meet with us or meet with the lender, Denise, or anyone who's your preference. Just please go to them and then just work with them, because there's other just standard flexibility loans that might just be something that works better for you in general. So as low as 3% down payment, kind of seems similar to the other loans that we have, but this is just if any of the other loans that you don't qualify for, then we just do have our basic 3% down payment standard loan. Okay. And this is just a quick required document list of what pretty much all financial lenders will ask for is a valid and expired ID, the copy of your Social Security or your ITIN letter, the most recent last 30 days of pay stubs, the last 2 years of your W-2s with your tax returns, and then your most recent bank statements. And then just kind of what sets self-help apart. Like I mentioned, for the interest rates, we don't follow federal because we are a nonprofit credit union. So we all do, our lending here is all through self-help. So we have our own guidelines. So we do flexible lending options, low down payment options. And then if we meet with us and you're not ready to move forward, we put you in credit building programs and free financial coaching so that you get prepared for your future buying that home. Next. And that is it. So thank you.
Awesome. Thank you guys both for your input and information in regards to the programs that you guys have available. Do any of our attendees have any questions that you guys would like to ask? Please add them to the chat. We would love to be able to answer those questions for you. If not, no worries. We will definitely be sending out a follow-up email. Once this video downloads, we will send you the link with the programs that are currently available so that you guys can go ahead and, or with the information for our both of our lenders who have been in attendance today and sharing the information that they provided, as well as the real estate agents that are participating with the Realtist of Fresno County. And that way, if you guys want to start your journeys, you are more than welcome to. There's also a form that will be on there, a link for a job form. And on that form, it will ask you guys a few questions about your current circumstances, like whether you have any funds saved currently, if you by chance know what your credit score is, and just a few other questions. And it's only just to give us an idea of where you kind of stand right now. but you don't have to have any of that. We will love to work with you to get you guys ready to be able to buy. So don't feel any pressure of not having any savings currently. Our goal with our Realtist of Fresno County is to be able to help bring more homeowners to our communities, and we want to be able to be the guidance and to assist you guys there if you need that assistance. If you do have a real estate agent or someone you are currently working with, also you are more than welcome to still be able to access the programs that are available with that agent, and they can reach out to us directly, or you can give them our contact information, whatever, it's fine, and they can you guys can work with those real estate agents to get your guys to get through your process of home buying. With that said, we do not see any questions currently. We'd love to be able to assist you. We will be posting this on our YouTube channel. Feel free to check back and see what other videos and information is out there on our channel, and we'll send you the link with the follow-up email with our information. So thank you guys all for joining us. We are greatly appreciate being able to serve you and our community and becoming homeowners. Thank you guys all, and you guys have a great day.
Thank you.
Oh, recording.